Walk down any affluent street, and you will notice a glaring paradox hiding in plain sight. The people who possess the absolute highest capacity to afford luxury goods are often the exact same individuals who abruptly stop buying them. Meanwhile, ambitious professionals and the aspiring middle class are quietly bankrupting themselves, sacrificing their future financial independence just to acquire objects that signal success today. This is the financial trap of buying expensive things. We have been conditioned to believe that wealth looks a certain way, driving a relentless cycle of status anxiety. Society tells us that arriving at a certain income bracket requires the immediate purchase of a depreciating European sports car or a designer wardrobe. But this relentless pursuit of visual success is fundamentally flawed. It acts as a massive invisible tax on your social mobility, draining the exact capital required to actually secure the wealth you're trying to project. To understand this trap, we must dissect a fascinating economic anomaly known as Veblen goods, named after the economist who identified them. Veblen goods defy standard laws of supply and demand. Normally, when a price goes up, demand goes down. But with these specific luxury items, demand actually increases as the price rises. The exorbitant price tag is the entire point. You're not paying for superior utility, you're paying for the exclusivity and the barrier to entry. Luxury brands have weaponized this pricing elasticity to perfection, deliberately engineering scarcity to fuel conspicuous consumption. When a company raises the price of a handbag from $2,000 to $10,000 without changing the materials, they are selling you the privilege of proving you can afford it. Analyzing this dynamic reveals that the true target demographic for these goods is rarely the ultra-rich. It is the aspirational buyer, desperate to bridge the perceived gap between their current reality and their wealthy ambitions. The system is designed to keep you looking rich while remaining fundamentally broke. Opting out of this engineered consumption race is the single most powerful strategic pivot you can make early in your career. When you recognize that buying expensive things to impress strangers is a liability masked as a lifestyle upgrade, you reclaim your financial power. The audacity to look aggressively average while quietly accumulating cash-flowing assets is the ultimate flex. It requires a profound shift away from seeking external validation and toward trusting your own internal balance sheet. This behavioral phenomenon is not exactly new. Back in 1899, sociologist Thorstein Veblen coined the term conspicuous consumption in his book The Theory of the Leisure Class, describing how the affluent use lavish spending to display social power. Over a century later, social media has hyper-accelerated this instinct, broadcasting our purchases to a global audience. The historical precedent shows us that whenever society places a premium on visible excess, the people who supply those goods capture the wealth, while the consumers merely capture the illusion of it. That deep-seated status anxiety continues to drive devastating financial decisions for modern professionals. We see individuals earning multiple six-figure salaries living paycheck to paycheck, completely paralyzed by the golden handcuffs of high-end leases, exclusive club memberships, and luxury vacations. They are trapped in a high-stakes performance, terrified that scaling back their lifestyle will signal defeat to their peers. This fear keeps them chained to a desk, trading their most valuable asset, which is time, for rapidly depreciating liabilities. Breaking that chain unlocks incredible momentum for wealth building. Imagine intercepting just 30% of the capital you currently allocate toward lifestyle maintenance and redirecting it into intelligent, aggressive growth investments. We are talking about broad market index funds, real estate syndications, or seed capital for a scalable side business. This redirected capital ceases to be a sunk cost. It transforms into an army of employees working around the clock to generate compounding returns on your behalf. The hidden tax of luxury goods becomes painfully obvious when you examine their secondary market value. The moment you drive that luxury vehicle off the lot, or wear that designer watch out of the boutique, its liquidity and value plummet. According to research from the American Automobile Association, premium luxury cars can lose up to 60% of their value in the first 5 years. You're actively funding your own net worth destruction under the guise of rewarding yourself. Wealth preservation demands that we prioritize assets that produce cash flow over liabilities that drain it. This is where the mindset of the wealthy diverges sharply from the middle class. A strategic investor looks at a $50,000 watch and calculates the devastating opportunity cost. While all market investments carry inherent risk and past performance is never guaranteed, historical data suggests that deploying that same $50,000 into a diversified portfolio could yield an 8% average annual return. That capital could grow to over $215,000 in 20 years. The watch merely ticks, but the portfolio builds an empire. Real wealth is inherently silent and largely unseen. It lives in brokerage accounts, commercial real estate deeds, and equity in private businesses. It does not need to scream for attention on a bustling city sidewalk. When you finally decouple your self-worth from your material possessions, you achieve a psychological freedom that most people will never experience. You stop playing a rigged game, designed to extract your capital, and you start playing the game of generational accumulation. The compounding effect of that redirected capital is staggering over a multi-decade horizon. By aggressively funding tax-advantaged accounts and scaling up your equity positions, you build a fortress around your financial future. This is the mechanics of true wealth creation. It is not glamorous in the short term, and it will not garner immediate likes on a social feed. But when market volatility hits or an economic downturn threatens your primary income, that fortress provides absolute, unshakable security. Yet as your income inevitably rises, the gravitational pull of lifestyle creep becomes intensely difficult to resist. You secure a massive promotion, close a lucrative deal, or scale your business, and suddenly the justification for a reward kicks in. The danger here is not the occasional celebration. It is the permanent upward adjustment of your baseline living expenses. Once you normalize a high-burn lifestyle, stepping backward feels like a failure, locking you into a relentless cycle of earning just to spend. Defeating lifestyle creep requires implementing a strict automated system for capital allocation before the money ever hits your checking account. We recommend adopting a strategy where 50 to 70% of every new raise or unexpected windfall is immediately routed into investment vehicles. By artificially restricting your perceived cash flow, you force yourself to live below your means while simultaneously accelerating your timeline to financial freedom. You're paying your future self first, aggressively and unapologetically. Escaping this ecosystem requires the absolute audacity to be misunderstood by your peers. You must be willing to endure the subtle judgments of colleagues who wonder why you are not upgrading your lifestyle to match your title. This is where personal finance becomes deeply psychological. You're trading the fleeting dopamine hit of external approval for the enduring peace of mind that comes from total financial sovereignty. Let them judge your old car while you quietly buy the building they work in. As your asset base expands, you eventually cross a critical threshold where your investments begin generating scalable income streams. Dividends, rental yields, and business distributions start to replace the need for active labor. This is the ultimate objective. Your portfolio becomes a self-sustaining ecosystem. At this stage, the concept of buying a depreciating luxury good becomes even less appealing because you intimately understand the sheer mathematical power of keeping that capital deployed in the market. Reaching this tipping point of financial independence completely rewires your relationship with money and risk. When your baseline survival is entirely funded by your assets, you can take massive calculated risks in your career or entrepreneurial ventures. You can negotiate harder, walk away from toxic business relationships, and launch disruptive projects without the fear of missing a mortgage payment. The refusal to participate in the luxury consumption race directly funds your ultimate freedom to operate on your own terms. Ultimately, we have to entirely redefine what status means in the modern world. True status is not a logo on a bag or a hood ornament on a car. True status is having complete control over your calendar. It is the ability to wake up on a Tuesday and decide exactly how you want to spend your time. It is the power to support causes you care about, fund your children's education without debt, and navigate economic crises with total calm. You are building a legacy, not a wardrobe. Every time you're tempted by the siren song of a luxury purchase, pause and evaluate the trade-off. Ask yourself if this object is worth delaying your ultimate autonomy. By consistently choosing assets over artifacts, you're constructing a financial foundation that can withstand the test of time. You're refusing to pay the hidden tax on your future, opting instead to build something permanent, powerful, and entirely yours. The path to extraordinary wealth is fiercely guarded by the temptation of ordinary conformity. When you recognize that the pressure to buy expensive things is nothing more than a trap designed to separate you from your capital, you win the game. Stay disciplined, keep your overhead aggressively low, and deploy your resources into strategies that compound over time. The world will try to sell you the illusion of wealth. Your job is to ignore the noise, build the reality, and secure your absolute financial freedom.